How much life insurance do I need, rule of thumb? So let's break that down into what is rule of thumb depending on your age, where you are in your life, and what goals do you have for generational wealth? I brought my partner, Jason Henderson, here today. We own Insurity Systems together, and we're going to talk about three things. How do you determine the right amount of life insurance? And I'm going to say based on your age, your health, and a lot of other circumstances. Number two, what are the strategies to yield the best results based on your insurance? Because are you going to use it for a bank? Are you going to use cash value? Or you just want the death insurance? Do you want generational wealth? What are your goals? And number three, the biggest mistakes we see people make all the time. So with that, Jason, welcome to our interview. So I brought Jason Henderson back, my partner at Insurity Systems, to talk about insurance. A lot of you have a lot of misconceptions. You're running around the bathroom wall called the internet getting wrong information. So we're going to talk about how much life insurance do you need as a rule of thumb? And to start off, what is the right amount, Jason? What's the right amount for somebody?
I really don't like that whole concept of what you need. It's not about that. Why does anybody want to only have what you need? Do you only want an income that's right at what you need, or do you want an income that will suffice everything that you want, right? And so from this point of view, what you need is not everything you want, right? However, the life insurance industry will grant to you the amount of death benefit that's based upon your age and your income, which is considered your human life value. Everyone should be insured up to their human life value. And when you do that, you're going to be in a better situation.
How do you determine your human life value? That's an interesting formula.
Human life value, there are underwriting guidelines. Let's just say a 30-year-old that's making $100,000 should be insured for $3 million. That's 30 times their gross annual income. It changes, say, like a 55-year-old, it'll be 20 times annual income. That's what they consider as human life value. Basically, what type of machine would you need to pay for that would kick off the same amount of income that you're making right now and take care of your beneficiaries going forward?
Interesting. So talk about the strategies for not only better life insurance planning, but if you started young, let's just assume, because that's what we scream from the rooftops from, this book, which is the minute your kids are born, if you don't have them, get them, they're tax deductible. You need to employ them, get them a Roth IRA. So let's just say, we actually start making some huge strides in getting younger folks signing up. How do they use insurance as a planning tool financially?
Well, the fact that there are guarantees with an insurance policy, a whole life insurance policy, and you've got to be careful that you're getting the right kind. Those guarantees are something that you can rely on, absolutely rely on. There's very little out there in the financial industry that actually has guarantees as even remotely close to what you have with whole life insurance cash values and its growth. When you know a certainty, if you will, you can then plan for other contingency plans or do other things. And so from my perspective, that's really where your planning starts, is with something that's certain.
I love that. So those of you that are here, if you have any questions, go to askloral.com. And if you've not subscribed to my channel, do that right now. Click that notification button. I want you here 5 days a week with you and your family. The earlier you get your family in this conversation, the whole family should be, I believe, insured and actually planning like this. And when you put your insurance inside of a trust, then you start the whole generational wealth. Make sure that you click the link below. We actually have a Gen W course. Jason's been very involved in it, and it will take you through what I call the power of five and how generational wealth is really built. And proper insurance is a huge part of it. So make sure you're here. Also, send this video out to 5-10 people that are part of potentially your estate, whether it's your kids, your parents, your siblings. The last thing Jason and I or any of our experts want is to get a call upon a death that none of this was set up right, and now you're going to probate court and losing everything you had. Don't let that happen to you. So Jason, let's go to the last point we want to talk about, which are the common mistakes. You see mistakes all the time in the life insurance space. And we'll start with watch for the people who are just doing this for big commissions. They make a ton of money. I look at even on the healthcare side, the Medicaid folks making tons of money right now because we're, heading into open enrollment and everybody's getting their health insurance again, and it's all commission based.
Well, one of the biggest mistakes people make is they think that they follow a mantra of buy term and invest the rest. No one does that, right? The equivalent would be rent a house and invest the rest between your rent and your mortgage payment. Rent your car and invest the difference, right? No one does that. So they think that buy term and invest the difference. It doesn't work. right? Another thing is they don't really see a long-term perspective. Well, I have a 10-year term policy. Well, you should be thinking 40, 50, 60 years in the future. You should be thinking 2, 3 generations down the road. When you think long-term, pardon the pun, term does not work at all. You've got to have whole life insurance that is a guaranteed absolute asset that will be there when you pass away. When you start early with this concept, you're basically being able to buy dollars with, say that an 18-year-old, you're buying future dollars with 8 cents. Well, by the time that you're 50 years, maybe you're buying a future dollar with 30 cents, right? You're still able to leverage your money to future dollars, which are income tax-free dollars that are helpful when you have trusts or you have a large estates or whatever it is. It comes into existence income tax-free, which is a huge benefit. It's the biggest benefit in the whole tax code. All 81,000 pages of tax code, the biggest advantage is the death benefit associated with a life insurance policy.
Absolutely. So Jason, talk about the gifts. Go to insuritysystems.com, click on the link below, and what will they be finding over there? Not only gifts, but also a schedule where they can actually make an appointment to talk to Jason and someone senior on our team.
Yep. There is a link there that goes directly to my calendar, and you set up a time with me and I'll dive in the details with you, where you're at, what you can do, what's the best way forward. That's a complimentary for going there. There's also a report there that you'll find very interesting for the fact that most people have these misconceptions and misunderstandings about life insurance. What most people call life insurance is not life insurance. It's really death insurance. And most people think I want the minimum, when in reality, you want the maximum. You want your human life value. You want all of it when you understand what a benefit that is to your beneficiaries and also what a benefit it can be for in your life. We believe here at Insurity Systems that you should be the first beneficiary of your life insurance policy, and that free report will help you. There's also a free chapter of Loral's book, and there's a free chapter of another book that we adhere to quite a bit.
Awesome. Well, I appreciate you being on. And again, make sure you take advantage of that strategy. I'm also going to give you a link to Gen W. So Gen W is our Generational Wealth Conference recorded, and it comes with a whole binder, and it starts with the first page of I'm Dead Now Why, which is basically the instructions for your heirs on what to do and how generational wealth can actually outlast 2.3 years, which is currently the statistic is most families' estates blow up within 2.3 years. That means your grandkids will get nothing. So if you're doing all this for some big legacy, then do it right. So make sure you take advantage of our strategy session, and we'll be back with more. If you have any question, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow morning.